Well, welcome back, everyone. What an exciting day in markets after a short covering rally on Friday in a market that has broken above that 50% retracement marker, as you've heard me in videos just like these comment on. Well, we got above that 414 marker, well ahead of today, and we're talking about that being a likelier outcome from pretty much the beginning of April. That's all good, but it's still moving into resistance, as you've heard Rob talk you through in recent videos. Resistance coming in from back over here. Now, the market today, on the heels of the Friday move, maintained a bullish posture, but did not really incrementalize, did not get any higher. So we got up to a high of 429 bucks and 62 pennies, just a penny above that retracement line there. And into the end of the day, we ended up closing closer to 427 bucks and about a dime on the SPY. Currently in the after hours, it's about 427 and about 31 pennies on the SPY. So we are in a spot where the market has come up to the next line to break out, did it with fumes, not enough fuel in the tank after that short covering rally on Friday. So now where do we go? Well, we had a great treat having so many of you BBT student family members join us today and join Rob for a very special educational session this morning live in the Active Trader Room and about Rob's ITP tools. And it was great tutelage and learning. And I was able to carry the torch a little after Rob left and take folks through some thoughts that I had on the market using the same tools, and did some live trading as well. Now, all I'm doing right here is zooming in on the chart that you were just looking at. I put some pivot lines on the screen here, which are weekly pivot lines, and these are support resistance effectively. The center of the weekly pivot range, the blue and the purple, I affectionately call the mattress. It's a catchment of support. We didn't come down there and test it. We came close. The low on the day for the SPY was 426 bucks and 37 pennies. So we were in and around this area at one point during the day. But currently we're sitting a little higher up. Now, I'm layering three key lines. These are our key lines in the Active Trader Room for this week. Our line in the sand, 424 and a dime. Bullish above, 432 and 70 pennies. And our bearish below line. On a market that has moved up in rarefied air on fumes, that still has momentum attached, albeit slower today, we have to use objective, powerful tools to help us with directional outcomes for any asset class, any type of trader overall. Now, overall, I'm still seeing some bullish momentum that is really hot air that needs to be let out of the market. I'm going to show you some tools that help me identify that and also help me day trade during the cash hours today in front of folks in the Active Trader Room. So the idea is, if we've got bullish momentum accelerating after these 2 days, today it stalled out, but it didn't break a level of support, i.e. our line in the sand. Didn't even come down and test the top lip of the mattress. Now, for those of you that are in ES land with me and want to see this through the lens of the ES, well, there it is. And you can see the key numbers. The low today for the S&P E-minis for the whole session was 42.73. So we came close, but we didn't actually test the top lip of the mattress or break down. Technically, the signals on a daily chart, 4-hour chart, are still positive and bullish, but we're seeing some loss of bullish momentum that doesn't seem complete. Now, let's not talk about seem or what could be. Let's go look at what the facts tell us right now. I'm going to take you down over here to first a daily candlestick chart of the SPY so you can see what happened on the behavior today. So there's your candle, slightly higher high, and closing in the upper half of yesterday's or Friday's range. Still a bullish print in terms of holding shorter term moving averages, but didn't close in a way that was exponential, like Thursday and from Thursday to Friday, or really Wednesday, Thursday, and Friday, from Wednesday to Thursday. So let's zoom out of here and go, what are the probabilities that we need to refuel some more, dip into the mattress, and then try for a bounce? Or is it done and does it break down? So I had the pleasure of using some of Rob's ITP tools today, along with the Wealth Chart member exclusive indications, to do a little day trading. One, and I think a couple of moments, 2 contract trading, which I've limited the account to very small size, and trying to make the highest probability decisions, and of course demonstrate with real live money. I can't guarantee that this happens every day. Please do consult your registered financial advisor. Even though this is a real trade with real money in my account, there's no guarantee of future results in this way, nor is it a record, is it an indication of past track record. When you look at the behavior on the chart in front of you, you can see my dome's ticking away, 42.81 right now. Gross just under $500, 487.50. And I've got the 1 hour chart over here with negative divergence. I've got the ITP triggers, core and fast, weakening, but not below the zero line. And then I'm going to remove my dome off the screen for just a smidge over here because I want you to see what that 4 hour chart looks like. 4 hour projects 3 to 5 days in front of it usually. 1 hour tends to project 3 to 6 hours. And between the 4 hour and the 1 hour, the question we need to answer is, do we have enough gas in the tank to go straight up? Have we refueled? Is there enough downward momentum to break the market down? Or are we in a process to continue trying to refuel with some bullish fuel and then get back to the business of up? I think it's, of the three options, I think it's the latter, as you may have gathered. And you can see the fast trigger on the 4 hour chart going magenta. You know that we throttled, which is the beauty of the ITP triggers, because I'm not worried about the weakening of this bullish momentum as I am expecting the market to be bid back up. But from where? Well, we are sitting right now at 42.81. You can see on the 1 hour chart, we are likely to see the fast trigger submerge. And between the 1 hour and the 4 hour chart, my expectation would be there's one of two areas that we can come down to. And the first of those two areas is roughly 42.51. 42.51 is not off base based on the TRP targeting toolkit from Rob as well. It's another marketplace indicator. And the ITP toolkit, well, it fired off a sell signal a couple of hour bars ago. That's the Pro RT. And then on the prior hourly bar, championship setup sell. And we are seeing prices under the fast speed line. And of course, we've got the triggers weakening, but not out of all bullish momentum. So the expectation is a slightly lower low, something in between the midline target from the TRP toolkit there down to the target 2, where then potentially a bounce can occur. And this is exactly what you saw on the slide right over here. Now, the idea for today in the morning versus the afternoon was very different. Long in the morning, short in the afternoon. And I'll show you where I took some of my trades today using the ITP toolkit in conjunction with the exclusive indications that you can't find anywhere else except for on wealth charts. So you are the lucky ones that have access to it. Now, when you take a look at the 42.51 area on the ES, okay, this area is what the targeting tools that I just showed you point towards. And if we do come down there and hold, this would be the area of likely primary initial bounce and could restart the move we saw late last week. Now, the alternative to this also has to be considered. Could we come down and make a lower low than where we are now and where that 424 for the SPY 42.51 is? Well, yes, there is a lower level at the 42.16 area for the ES, and that would correspond to around $420 and change for the SPY. So the 42.16 area is, as you can see, in a thicket of support as it would come down there. It's either our line in the sand or this area that we are expecting the market to pull back to and then potentially bounce. Now, during the day today, I got the opportunity to play some long side day trading in front of members earlier this morning as we were seeing the market rise up until midpoint of the day. And this afternoon, I got to do some short side trading in front of members to play the downside. And again, all trading is at the independent trader's risk. Past performance is not an indication of future results, but my hope is that you can see when technical signals come together with powerful objective tools, there's a way for higher probability decisions for a trader. I hope that you enjoyed this video. A big shout out from Rob to everyone listening in. He'll be back on the horse making videos with you and seeing you in them shortly on this week. And great job to him in the active trader room this morning while he was giving us tutelage on very specific setups and strategies using the ITP tools in conjunction with the Wealth Chart member exclusive indicators. It was a great time. I'm looking forward to a lot more, and I'm looking forward to seeing you in another video just like this in the very near future. My insight to you is 42.51, likely a bounce off that, or 42.16 and likely a bounce. And then, of course, evaluate from there to determine if this market move gets restarted and we're going up and away, or merely back testing resistance and coming back down. Lots more on this in the days to come. Have a wonderful rest of your day, and thanks for watching.